So let's begin. We'll start off with what the situation is for farm income, our agriculture situation, and what's coming ahead for 2022. He is the fellow that's instigating the gathering today. Dr. Paul Mitchell is professor in the Department of Ag and Applied Economics here at the UW. He is also the director of the Rank Agribusiness Institute, and he's going to kick us off today with farm income, where we've been and where we're going. Paul, welcome to the podium. Thanks for having us.
All right. Thanks, Pam. I really appreciate everyone coming. This is the pandemic version. It's better than doing it virtually completely. So, why won't it? Oh, I'm thinking it's a touch screen. That's the problem. It's like, oh, it's not my phone. It's not my phone. All right. Thanks, everyone. We'll get started here right away. And again, I really appreciate everyone coming out and enjoying. We got to get our lives moving on again. Let's start about farm income. This came out in December of 1st. This is USDA Economic Research Service. It goes all the way back to 2000, the last 20 years. It's got farm income at the national level. And what you'll see, this is net farm income in 2021. There's a forecast. It's 24% above the 20-year average at 117 billion. That's you can see the last several years we're getting above average. That means the average U.S. farmer is going into 2022 in a solid economic position. Where's this money coming from? This is the crops on the left, livestock on the right. This is farm gate receipts, revenue from selling these different commodities. The livestock on the right, crops on the left. Where's it coming from? You see the last 5 years are there. 2021 is forecast a big jump in revenue from corn, big jump in soybeans. On the livestock side, cattle and calves, beef, broilers and hogs. Technically, dairy's up a little bit, but you'd say it's relatively flat. So where's it coming from? Selling things for higher prices. The other big source is government program payments. These are all the various programs over the last, since 2012, how much billions of dollars are pushed out into farming. Vast majority of the time, the Farm Bill programs are at the bottom there. They're all the direct payments, ARC and PLC. Dairy, they're small. They're all below $5 billion. Add them all up, are somewhere in the 10 to 12, $13 billion dollar range for all of them. Then here comes MFP, the Market Facilitation Program, and started in 2018, but 2019, 2020 still had a little bit. Then the Coronavirus Food Assistance Program, CFAP. We pushed a lot of money out the door. That 2020 had over $45 billion pushed out to agriculture. That's a huge chunk where this money came from. It's still a lot in 2021. 2022, it's back to normal. No MFP, no CFAP. ARC and PLC are probably not going to pay very much. It's just going to be CRP and sort of those kind of crop insurance. 2021 was a great year for crops in Wisconsin. We set new records. Corn averaged 180 bushels per acre. That's a new record. Silage averaged 21.5 tons. That's a new state average record. Same with soybeans, 55 bushels. That's unbelievable. Our newest records, all three of them. Hay stocks are up 18%. I don't know if people realize, but the last 3 years we set a record low for how low our hay stocks got. We made a lot of hay last summer. All of this despite having a lingering drought all summer long. These are drought monitors maps from the U.S. Drought Monitor for mid-June and mid-August. Just picked them. You can see it was dry most of the summer. Never got super wet. Some areas it got wetter, but southern Wisconsin was generally the worst. So what are farmers doing with all this money? Paying down debt is the first thing. This is from the Federal Reserve Bank in Chicago and has the percent of the farm loan portfolio in the 7th District with major or severe repayment problems. What you see there in 2020 is on the far right there, that first arrow on the high end. That was pretty high. That's basically, you can see how it grew each year, 2014, 15, 16, 17. 2020, it hasn't been that high since the 1980s. That's how close we were. We were on the precipice of a farm crisis. 2021, though, all that money started coming in from the selling of everything, and the government payments really started kicking in. It hadn't been that low now since 2014. So we really, first thing they did is pay off their debts. Land values are up. These are the USDA numbers on the left, the Federal Reserve Bank for Chicago again on the right. Those on the left are the USDA numbers. Wisconsin up about almost 11%, 10.7%. across the whole Midwest, that's kind of what those 12 states in the middle there, the I states, it's almost not quite 10%. That's all cropland. On the right there is the Federal Reserve Banks. They survey bankers in the areas, and it's more good farmland. Wisconsin, the top number is what happened in the third quarter, July 1st to October, and then the bottom number is the annual from the year October 1st back to October 1st of 2021. Wisconsin's up 7%. But look what really happened down south of us there. Illinois, it's up, 15%, or Indiana, Illinois at 15, 12, 15, but Iowa just through the roof, 34% increase in the land values in 1 year. That's some serious land value jumps there. So what are they doing with that money? Some people are buying land with it, and prices are shooting up. Farmers are also paying higher costs. This is the producer price index. This is for the producer side of the economy, all the companies and businesses making stuff to sell. This is their risk of their cost. If you want to think of it this way, it's an index of their cost. You see it was very flat for a long time there after the Great Recession. It just, 2012, 13, 14, 15, kind of flat. Then the pandemic hit, it dropped, and then it shot up. Up 22% from January of 2020, the beginning of the pandemic roughly, to November 2021. So there's a lot of cost increase on the production end of the economy, farmers included. 2022, what's happening for costs for corn and soybeans? It's up about 25% from last year. Most of this, fertilizer's gotten all the news, but there's all the input costs. Think of that producer price index jumping up. It's fertilizer, but it's also it's energy. Diesel fuel is up. All the machinery costs are up. The chemicals you buy, the various chemicals, the labor costs, everything's up. What these are is for Northern Illinois, from the University of Illinois Farm Doc site, Iowa State University's budgets are there. This is the change, those first two rows are the change in the non-land costs for 2022 crop relative to 2021 crop. Costs about 25% more to put your crop in the ground. That's not including the rent. The next two lines are the break-even prices. What do you need to break even with these new cost structures to sell your corn for or to sell your soybeans for? The first one is paying the high end of rent, about 286 is somewhere in that region. The bottom one is sort of the state average rent, about 230. These are Illinois and Iowa. But you can see the break-even prices, even with the high rental rates, are 4.25 up to 5 for corn. Corn was closed yesterday at the board at 565. So even with that, and the same thing for soybeans, it was well above 13. 1308 if I remember right. Break-even price for beans, even on that high rental rate, is still 11.50. Farmers with these higher costs can still make money, is what I'm trying to say right there. The good news is that producer price index is starting to level off. I added December, the last month, and what do you notice? It's starting to come down a little bit. It's down almost a percentage point from the month before. So maybe we're starting to see that the inflation, the labor shortages, the supply chain issues working their way through. Fertilizer prices have also stopped decreasing. These data are from the USDA's Ag Marketing Service. And what they do at Des Moines and Springfield, Illinois, they collect these data. They go back over a decade or more. It's a long-run time series of fertilizer prices. They have a few other things in their diesel and stuff. And they track them every 2 weeks. They put out this report. What are these things selling for? And these are what happened to these prices in the last 12 months. And I'll just take anhydrous in the top there, 205%, 200 or 197 in Springfield. Basically, that means the price tripled from last year at the same time in the last 12 months, early mid-January. It went from $500 a ton to $1,500 a ton. The other ones are there. You can see that's the highest one, but liquid nitrogen, UAN, whatever you want to call it, almost tripled there for Des Moines, 150% increase plus for the other for Springfield. But you can see DAP, phosphorus, DAP and MAP are about 70% up. Potash up about 100+%, more than doubled. The last 2 weeks, though, all of a sudden, from the December 30 or 31st report to the mid-January report, it's down on some of these. We see Des Moines is down on a few of them. Springfield is down. Those that have jumped up haven't jumped up that much. So I think we're seeing the end of that fertilizer price spike. We'll see. We've got to wait. This is only a trend. We might have turned a point. We'd like to see the next one. The last thing is this consumer price index. This is what consumers paid, the retail end. This goes all the way back to 1960. And what you'll see there, 7.1% is what we have. Those last little blip, there's that big jump up at the last, is the January 2020 until now. Inflation has not been this high since 1982. Take a look, slide all the way to the left. It's back in the 80s when we saw this much inflation. Producer price, remember now the producer price index is up 22% since the beginning of the pandemic. This is up 7%. There's a lot of inflation on the production end of the economy that has not been pushed through to the consumers yet. Expect more inflation at the consumer end. Expect the Fed to start tightening up interest rates to try to keep that down. Last thing, we've been talking a lot about farmer income a lot. All is not rosy in America's dairyland. On the left is farm consolidation rate. On the right is the Chapter 12 bankruptcy filings in the state, in the nation. Consolidation came down starting in about 2000 in January of 2020, and we hit about that 4.5%, 5%. It's been climbing again, but we're back to normal, sort of. It's a new normal. It's higher than it was back in 2016. But we've lost about a third, a little more than a third of the state's dairy farms have disappeared in the last 7 years, yet cow numbers are essentially unchanged. Chapter 12 bankruptcy filings, we're still leading the nation. That's just a persistent problem we seem to have in the state. So going into 2022, most of Wisconsin farms are in a solid financial position after a good year. High yields, high revenues from crops and livestock, high government payments. The costs are up, say 20 to 30%, depends on your operation. 25% is a good average to expect, but farmers can still earn money for these crops at these prices, at our current expected prices. The inflation may be slowing, but expect some interest rates to increase. Ag interest rates are at an all-time low, so expect those to climb up. My real concern in 2022, besides all the market uncertainty, what's going to happen in the Ukraine, what's going to happen in China, they can keep buying, what's going on in South America, locally I'm concerned about drought. We entered 2021 with a full soil moisture profile, but it's not the case in 2022. Madison's about 13 inches behind. Milwaukee's about 10 inches behind. There's a drought monitor from January 20th. We're still in that dry weather, so we need to, that's my big concern for 2022. All right, next up.